Hey, everybody, this is Danielle. Welcome to my live stream. This is a live stream of the Simpler Trading Mastering the Trade room. You can find that at simplertrading.com. And then I also have my own link if you end up wanting to join the room, or you can join and get a bunch of the bonuses that I have available. So I'll go ahead and post the link in the chat, but just wanted to say hi before I start streaming in the trading room itself. Let me know if you have any questions, tickers. I'll definitely be looking at the chat to see what kind of questions you have throughout my segment. I like to go over the live trades that I have in the trading room, and then I also like to take a bunch of requests too. So let me just go ahead and get started in the trading room. Hello, everybody. This is Danielle. How are you doing today? Happy Friday. I hope everybody had a fantastic holiday. Happy Friday. Happy Friday. All right, I want to go ahead and start off by taking some requests. I'll definitely go over the trades that we have on together. Wait, it's Friday? I know it feels a little strange because, after having a half day on Wednesday and then Thursday being off, yes, then we'll have another 2 days off. And on Monday, I'm going to be joining Charles Payne for some of my top picks of the year for the new year. All right. So just looking at the market overall, I mean, technically today is the beginning of the Santa rally. As you can see, the indexes haven't really done a whole lot. But I mean, I feel like that does have a little bit to do with the fact, like we were just saying, that today is Friday. People took off half the day on Wednesday. Um, all day on Thursday, and then now it's kind of the sleepy day after, I'm sure, what were late nights. I didn't get home myself with my children until about 11 o'clock last night. So I think people are probably just slow moving today, if I had to guess. So I feel like the fact that the indexes are pretty much flat, given all of those circumstances, is not that abnormal. We have the S&P that's down 3 points, which is basically nothing. We're at 69.79. And if you look at the way that it's trading right now, we are just now getting like a little bit of a boost here, that you can see, nice little trade higher here. So we'll see if we end up getting a buyable move here at the end of the day or not. If you look at the NASDAQ, you can see that, pretty much just traded sideways the vast majority of the day, and we are now just positive by 3 points, 4 points almost. Woohoo! So, very exciting day. But overall, you definitely have some resistance, which is going to be the high on the day, and then you have some support at the low on the day. So, same thing here with the S&P. Taking a look at the market internals, you can see that the ticks are pretty much neutral. We did have this moment in time where the ticks came up into the plus 600 area, but they pretty much sold off immediately after that. So if you're looking at this right here and you're just trying to figure out, do we have an end of day trade going into the end of the day? We just want to watch for any kind of consistent ticks up in the plus 600 range, or any kind of negative ticks down here into the negative 600 range. As of right now, just don't really have a whole lot going on. So that leads me to, okay, is there anything that we could do for options expiration Friday? That would be a short-term trade. In the 0DTE SPX, is there any kind of like pinning potential if the indexes are just going to trade sideways here? So we can go ahead and look at that. The VIX has continued to trade lower, so I'd say that, overall that looks pretty good. If you're a bull, put call ratio right here and now. Um, it's a little bit lower than what I would like to see at 0.68, just because it is difficult for the market to rally when the put call ratio is too low. So in this situation right here, it is kind of one of those things where it's like, ooh, is the Santa rally going to come through because the put call ratio is so low? But I think overall, a lot of the chart setups still look really good. I feel like there's a ton of weekly squeezes out there. There's a ton of daily squeezes out there. The end of the month in December is generally bullish. And then you also have a situation where, January is also generally bullish. You have a lot of um, money being moved around. You have the situation where you have earnings at the end of the month. So, I'm starting to look at a lot of these run into earnings trades. So I still think that there's quite a bit to do here, even though this is just kind of a sleepy Friday. Taking a look at the SPX, right now we're trading at 69.28. So I am somewhat tempted here to just come in and sell a neutral iron fly, just to see if we can get some theta decay uh, going into the last, 50 minutes of the day. I don't love doing that early just because we can start to get some pretty big movement right at the end of the day. But I don't know. I feel like today, if I was going to do it any day, today is probably going to be the time to do that just because, like I said, Sleepy Friday. I don't know that people are going to start suddenly instituting a bunch of buys the last 15, 30 minutes of the day today. If you look at the 15-minute chart, you can see that we do have a 15-minute squeeze. So that would be, one reason for the market to go higher. We have a price target on that at 69.40 and then 69.50. I do think that those are some pretty good upside price targets. I don't know that that's gonna trigger today. It might end up triggering, Monday morning. That would make a little bit more sense, or we get a nice gap up on Monday morning and then we start moving then. Um, if you look at the S&P futures, kind of the same thing here. We do have these lower time frame squeezes with the market ready to go. And I still think that 7,000 is going to be a great price target. So, anyways, as far as an end of day trade is concerned, let's just see what we got here. I highlight out. We're going to get a 20-point move here at the end of the day, even though we have a nice price target here at 69.50. So let's just look at our options chain. All right, so it looks like we have just a ton of open interest at this 69.30 strike price, which is where I would come in and sell that neutral iron fly. You only have a $5 move into the end of the day, so it's not like there's a ton of premium here. Let's just price it out. All right, so if you do it $5 wide, you have a pretty good risk to reward because you can get $2.85, $2.90 with only $5 wide. So, I mean, that's pretty decent risk to reward, but only 5 points is a pretty tight way to do a neutral iron fly when there's still 50 minutes left. So, even though the risk to reward is pretty good, I don't know that the S&P is only going to stay within a 5-point range. I usually prefer to do these $10 wide, but when you do that, because the premium is so low, um, your risk to reward is not going to be very good. I generally like to get a 1-to-1 risk reward on these trades. So in this instance, um, you know, you have a $10 wide spread, 69.30 to 69.40 on the call side, and then you have a $10 wide spread, 69.30 to 69.20 on the put side. If you sell both of those spreads, you get a credit of $3.50. But because the spread is $10 wide, um, the max that you can lose is going to be the difference between $10 and the credit that you get. So your risk to reward is not going to be 1-to-1 because you would need to get a credit closer to $5 to make a 1-to-1 risk to reward. So I don't know that that's super favorable. I feel like this one is better just because the risk to reward is much better. In this instance, you know, you have a $2.75, $2.85 credit. And then, the max that you can lose is going to be about $2.20. So the risk to reward is a lot more favorable on this one. The question here is just, is the market going to start taking off? Looking at the options chain again, we do have some high open interest here at the 69.35 strike. So that would be, another zone to look at. The 69.20, can't say that I see anything super special there. But 69.35 and 69.30, those are going to be the two strike prices that I'd really look at. Now, shifting over and going back to the ticks, because the thing is you do not want to make a neutral trade if buyers are starting to come in, because things just going to rip at the end of the day and then you're just going to get a max loss. So we don't want to do that. If you look at the ticks, this is going to be the main signal that I'm usually monitoring. And you can see that they're starting to pick up. So the ticks are up above the 0 line. They're climbing higher. They're blue. They're back up into the green zone, which is great. However, what's interesting is that the indexes have not moved at all. You can also see the vol spread is starting to ramp up here. The candles have gone from red to yellow to green to bright green. So that's a great sign for buyers coming in at the end of the day. And then you also have the VIX rolling off the cliff. So I feel like, on one hand, I'm interested in doing the neutral iron condor. It's not super favorable just because it only makes sense to do it $5 wide. And I never do it $5 wide. I usually always do it at least $10 wide, just because $5 is not going to give you very much room for that to work. So not super favorable. I feel like if it starts taking off here, that might be a little bit easier. And you do have quite a bit of open interest here, I guess, as well at the 69.40s. So let's just continue monitoring this for another couple minutes. I mean, if it does start taking off, might be able to do a butterfly at the 69.40s. I do like that 15-minute squeeze. Let's go ahead and look at the NASDAQ. ChatGPT gave me December 24th, the start of the Santa rally, the last 5 trading days of 25 and the first 2 of January, Monday, January 5th. Let me see. Let's see. 1, 2, 3. Huh, that's interesting. No, I mean, you're not wrong about that. That it is supposed to be the last 5 days of December. So that's, I mean, you are right. That would start it at the 24th, not the 26th. And it is supposed to be the first 2 days of January. You know who's the ultimate master of this is Jeff Hirsch, who's the one that literally wrote the book on it, The Stock Trader's Almanac. So, I mean, historically for us, we generally because we're options traders, because we do a lot of short-term trades, um, we generally try to start it right after Christmas, just because that's when the volume comes into the market. Um, let me just see if he posted anything on here. I like to follow him on Twitter. He posts a lot of really helpful content. I thought he had a post on here about the exact start of the Santa rally. So I think you're right that technically it would be starting on the 24th. Um, I did start getting into I did start getting into a bunch of my trades on the 24th just because generally the volume is going to come back into the market after people are done um with vacation, right? I mean, cuz it's like just so many people are on vacation this week. I thought he had an exact graph on here about this, but if you want to check out this. He just did the 15-minute segment on Yahoo Finance. So what did he say? Did it start on the 24th or the 26th? And then basically, the way that it works, like the Santa rally is an indicator. So if the market isn't higher by, I would say, next Friday, then that's a bearish indicator at the start of the beginning of the year. So basically right now, and the way that we trade this, you know, every year, um, what we do is we pretty much just get set up um for trading it to the upside. There are gonna be some years where it doesn't work, but I would say the number of times that has happened has been pretty few and far between. So I would personally rather take my chances with it working, and sometimes it doesn't work if you understand what I'm saying. Especially given all of the bullish setups that we have right now. So looking at the Nasdaq, I think the Nasdaq looks great. I mean, it's in a consolidation pattern right here. We're consolidating on the daily chart. These white dots right here are the daily squeeze. So that just means that the price is consolidating on that time frame and it's getting ready to break out. I'm personally betting on it breaking out to the upside. If you look at the weekly chart here, weekly chart also has a fantastic consolidation pattern. If you look at the squeeze down here, you can see that there's a series of green dots, and then once those white dots begin, that just means it's consolidating on that time frame. And so when it breaks out, it's most likely to break out in the direction of the trend, and that trend is up. So the upside price target on that would be 28,000. I do have a trade on with you guys in the trading room right now for the spiders. So if you look at the spiders, you can see the spiders made a new high this week, 691.66, looking pretty great. And if you look at the lower time frame chart on the daily chart, you can see that we've traded up into that 691.66 price point, and that was today. We have this squeeze that's ready to break out. And if you look at these upside targets that I drew on here, we have an upside price target at 700. So one of the trading room trades that I have on right now is this one right here. This is going to be the debit spread. So I have the 685 call, and then I sold the 700 call, which has created a debit spread here. So this one's up slightly. I put this one on just on Wednesday, right before the market closed. So, it is going to take some time for that 700 call that I have sold to decay. So that's another spot, where you can make money on these debit spreads. But essentially, what I'm looking for is just for this ticker to trade higher going up into that $700 strike price. So we're $10 away right now. Everything's looking good. Um, don't have any complaints or any other adjustments. Another trade that I have on with you guys right now is going to be Taiwan Semi. So with this one, I went ahead and just bought the long calls because um, this ticker has a pretty consistent pattern of rallying going into earnings. This is my earnings grid, and on my earnings grid, you can see that this ticker regularly gaps up. Gap here, gap here, gap here, gap here, gap here, gap here, and then it has earnings right around the middle of the month in January. So you can see that there is an earnings report on the 15th of January. And so right now we're in the time frame where we can look for those rallies going into earnings. So if you look at this right here, you know, there's a label right here that shows when the pre-earnings 21-day time frame begins. That was on the 16th of December. So we're in that pre-earnings time frame right now. Historically, this stock during that 21-day time frame will trade higher by almost 5%. So that's pretty good. You can also see that, yeah, it has already traded higher. So how much more upside can you get out of this one? But I'm looking for this to retrace back up into the previous high at 313 and then trade on up into 325. So we have these long calls on right now. It's up, 1.25% today. I think it looks great. They're up 20%, but I mean, I still have a much higher price target on this because I have that price target up at basically 315. So I'm going to just continue holding on to these calls. Everything looks good. No complaints to be had. Next one is going to be Google. So if you look at Google, Google has a great pattern right here. We have a daily squeeze setting up. We have an earnings up on February 3rd. And so when you look at that, I feel like targeting that previous high at 328 and then onwards and upwards into 340 is going to be great. So again, we have this trade on right now. I think everything is looking pretty good with this one. Just go and check it out, see what we have here. So I just put this one on right before the market closed again on Wednesday, but essentially it's just a butterfly where I have a range between 315 and 330. So when you're looking at this, all that it needs to do is it just needs to come up above that 315 price point, and then that strike will be in the money. As of right now, the 315 is out of the money, so it's just kind of holding steady here, down slightly. But overall, the goal with this trade is to see the ticker trade between 315 and 330 before this expires on January 9th. So I think all that looks pretty good. When you're looking at, what else you could do with it or what else you could add to it, I think the long calls are a good option as well. I think that this is, it's a pretty strong, solid, consistent ticker. The only thing is that the long calls are not going to be very cheap. So the reason why I like to do a lot of butterflies is because you can get them for a much lower price. But, you do also have to be a little bit more precise with your price targets and also your timing. So if you look at the long calls, you could do a long call out into February um, just to give yourself more time, and then you could see if you could hold on to it for a rally going into earnings. But I mean, it's going to cost like $2,000 a piece instead of the, almost $400 butterfly that I bought. So it's going to vary pretty substantially. As far as Google is concerned, the weekly series just doesn't have a lot of volume, so I'd probably rather go with the monthly series. So you could get like a Delta 70, but in that case, it's going to be even more expensive because now you're going out 56 days. So that's going to cost you like 2,800 a pop. Um, if you go down into like the January 30th series right here, and just see, okay, are these a little bit cheaper? They are going to be a little bit cheaper, but that's also not going to take you all the way up into the earnings report, which again is why it's cheaper. So, you could do these Delta 65s for 1600 or these Delta 70s for about 2000. So, those look pretty good as well. The other way that you could add on to the trade is you could just add on to it by selling some put credit spreads. So, especially if you go out into the monthly series where you're going to have a little bit more volume, um, you just kind of have a situation where you could sell these just a little bit in the money, like around the 315 strike price. Um, it's just going to take a while for this to play out. Because, you're looking at a January monthly series. So, you could do 315, 310, um, $2.29 right here. Sorry, 27 cents. So I think that one looks pretty good too. And that's also what I was going to suggest with Amazon as well. So if you look at Amazon, um, Amazon is up above the 50 simple and we have a daily squeeze on right here. So I feel like this one is a pretty good candidate for selling some put credit spreads too. Yeah, VIX lows on the day. The VIX is just rolling off a cliff, which is great. Um, like I said earlier in the session, I feel like the lack of movement in the overall markets is probably related to the fact that everybody is tired after yesterday. I don't know. I don't go out and drink and party anymore, so it's not that. I'm just tired because I have 3 children. So on Christmas Eve, I was playing Santa. I even thought at that time, "Oh, yeah, I should send out a tweet at, like, 2:30 in the morning." So I was doing my job of Santa until 1:45 in the morning on Christmas Eve, and then my daughter, um, who's 14 months old now, she, of course, woke up while I was playing Santa with my husband, and, she was just wide awake, and she doesn't really understand it's Christmas, obviously, but she was completely and totally wide awake, just stayed awake, jumping around, bouncing around like a little crazy person until 4 AM. So so then I did get to sleep for a few hours, but then, of course, it was Christmas, so made brunch and did all the presents, all that stuff, went to my parents later. Hello, hello. So anyway, I think that the market is experiencing just a little bit of that. I don't know what it is, but everyone was into having a great holiday this year, everyone. So I guess my issue with the end of day trade, because I mean I love doing the end of day trade, is just that there's just nothing happening here. The market internals are bullish for sure. VIX falling, put call ratios falling, vol spreads going up, the ticks were going up. Everything looks bullish. It's just nothing is moving. So the one thing that you could do in that situation, because you don't I love doing these really low cost butterflies when you get those nice rips at the end of the day. And I like doing those because, you know, you're paying a really low price for a potential of a great reward. So those are a lot of fun, but they're not going to work when the market's not moving at all. So there's not really a reason to do that, even though the market internals are bullish. So, I mean, I guess what we could do is we could sell a put credit spread. It's just that the implied volatility is so low that there's just not, I mean, like, there's no premium here. So that's just why we're kind of limited today with the different options expiration Friday options. because I mean, it's like, do you really want to sell a put credit spread that's $5 wide for a dollar? I mean, not really. There's just nothing happening there. And then if you go back and look at the neutral iron fly, now that we have made it through another 20 minutes of the session, the neutral fly is still, it's not bad for the credit. $2.55 credit. The expected move is, $4.34. I don't have a problem with doing this. I just prefer to do them $10 wide is the situation. So, I don't really mind doing this one. We have, like I was saying earlier, um, we have some high open interest here at the 69.30 strike, and then we also have high open interest right here at the 69.35 strike. So, it could go one of three ways, I guess. One way that it could go is if you sell that 69.30 strike and the market still doesn't move, you get a perfect pin. All you do is get to collect the premium into your account. That's great. The other way that it could go is the market starts taking off right here, which it looks like it is. I mean, the vol spread is going higher, the VIX is going lower, the ticks are going higher. And then it trades up into 69.35. And in that case, you're going to take a $2.50 loss on the neutral iron fly. So those are, two main ways it could go. The third way is, if it sells off hard, then, you can lose money to the downside too. Let's see. Looks like Henry is closing a trade. Yeah, let's look at Tesla. That's very interesting. Ticks are picking up again. All right, so this is kind of the moment where if it's going to move, it's going to move when the ticks hit plus 600. If the ticks are going to come up here again and hit that plus 600 level and then just go nowhere, then, that's where it's like, all right, fine, let's just do something neutral. Looks like Henry is selling his $500 butterfly for 28 bucks. Great job. $50 wide butterfly. Tesla is hanging out at 477.81. Ooh, and guess what? Tesla is just about to enter the run into earnings time frame too. Thoughts on CRWV and Oracle? Yeah, would be happy to look at those. All right, still doing nothing. Just had Schwab close butterflies that were going to be right at the center. Margin desk said not taking risk of customers being assigned. It's so annoying. That hasn't happened to me for a while. Um, but yeah, I mean they have done that to me before. This was like several years ago when I was working on one of my $5,000 accounts and I was building that one because, they close it if you don't have enough money to take assignment. Um And I was so mad. I wrote support and I was like, "Oh, this was gonna be like a perfect Amazon pin." Um, and I calculated out how much money I lost based off of them closing my trade early. And first of all, they tried to tell me like, "Oh, it's so unlikely to pin a butterfly. You don't, that was just luck." And I was like, no, wasn't just luck." But what they did end up giving me, um they gave me money off on commissions to, like, make up for it. So I told them how much money I lost. You know what I mean? So they gave me, like, a certain number of stock trades, um, to, like, make up for it. So you could try asking them for that. Alright, so I'm just gonna try this. Like I said, I don't love that it's only $5 wide. Um, and we are getting some bullish price movement at the end of the day. So I'm gonna try it for maybe like 15 minutes. Um, so I just basically sold the neutral fly at 69.30, and I'm just gonna see if I can get some theta decay on it. I sold it for $2.45. So let me just see if I can just put a good till cancel order in here. So I sold it for 245. So let's see if I can get mm, I mean, in a perfect world, I would like to get like 120 out of it, but let's just try this. Because then that would be 50%. Did you ask them if they're going to make up for all the money that you lost? Like, no. All right. So I already placed this order. Like I said, I got in for 245. I'm going to just place an exit order at 120 and just see if it can decay while we're sitting here hanging out. I have $500 of risk on the trade. Basically, if the market rips at the end of the day. Oh, no. How did that happen? Oh, why? I hate it when they do this. I'm so sick of this brokerage. On the phone, discounts on commissions is not an option. Is it a good time to buy calls on the VIX? I don't usually do that. That's not usually a trade that I do. All right. So as you can see, I was trying to place my limit order at 120 and I accidentally got filled at the current price. So I got out of my trade. Man, so annoying. I locked the order as a limit. I would have to go back and see what just happened, but I basically locked the order as a limit and it didn't work. So it closed me out at the current price and I lost $35. Tell them you had a really tasty trade. Let's trade accounts. I want toss as Charles is not available in Canada. Well, it looks like maybe I'm lucking out because now the market's starting to take off, but I got I have a funded account at Moo Trading, so I was going to try to start using that one. All right, let me look at CRWV and Oracle. So, this is just one of those where I feel like just, maybe just buying and holding it is going to be the potential way, um, to trade this one. I feel like it has good long-term potential. It's had 3 earnings reports so far. You can see that the losses have lessened. So, we've gone from, losing $1.49 to losing 60 cents to losing 22 cents. So I feel like overall, that is going to be, that's a good sign for some long-term growth. But I mean, as far as the pattern is concerned, relatively recent IPO, you also just you don't have a daily squeeze, you don't have a weekly squeeze. Um, There's just not really too much going on here that I would look at this chart and I'd say, "Okay, this is a bullish chart," you know? So, I don't like the way that it broke down below the 50. I did have some 2x ETFs on this ticker. I went ahead and got out of those, um, because of the break underneath the 50 simple. It's just really hard for tickers to kinda get back in line, because when you break the 50 simple like that, it just creates so much resistance. So, there's resistance at the 21 EMA, there's resistance at the 34 EMA, there's resistance at the 34 EMA here. So, I just feel like as far as trading this one right now, I don't have a setup on it. I would need, like, a squeeze, would need a squeeze on some time frame, which I don't have. I think it's still a decent long-term stock pick idea. I just don't have a setup on it. Moo Trading sounds like a marketplace for fresh mother's milk. I agree with you. Platform looks pretty cool though. The main reason why I wanted to switch to that one is because they offer a percent on your cash. So, whenever you're trading, you should never be, you know, fully invested with all of your cash. Um, because that's too risky when you're trading. So, you should have like at least 50% cash in your account. Um, I usually have even more than that because I'm usually trading like 20% of my money at any given time. So the reason why I was looking into switching to Moo Trading is because they offer a percent yield on your cash. So like it's effectively a high yield savings account and a trading account all in one. So with Oracle, um again, this one broke down below the 50 simple right around here, which was at the end of October. Then it broke below the 100 simple, then it broke below the 200 simple. So all that is pretty bad news. Um, I don't like to see a chart breaking that severely on the daily chart, and I also prefer to see it up above the 50 simple on the weekly chart. So I feel like for those reasons, Oracle is difficult for me right now. But this was also a pretty extreme move. This was a really extreme move after earnings. We've come down, we've broken below the 50. Um, and at this point, if it could recover up above 200 and start taking off, I mean, I would buy it on a long-term basis. Sometimes these moves just kind of have to work themselves off. Um, it wasn't great that it broke again after earnings. That's just really not a great sign. But if it could get up above 200 and then up above, I would say probably 220, that's where it would really start taking off. So we're starting to see a little bit more bullish price action here. Um, We're up into 69, 32, 66. Feel like we could also do just something for like even just for something for Monday, you could do like a 69.50 butterfly, like a 69.30, 69.50, 69.70, something like that. Could work out. Does Moo use toss? I mean, no, like it's like its own separate brokerage. I think they have a ticker. Let me see. Maybe it's not publicly traded. But this is the one that I'm talking about. Anyway, so I don't know. I was gonna start using this one as well. Oh, Futu, thank you. All right, let me know if you guys have any more questions that I can answer for you before the market closes here. Daily chart, you're below that 50 simple. Nice weekly squeeze. Okay, Roku. Yeah, I mean, that weekly squeeze looks pretty good. Danielle, one question. When will Tesla stop yanking my chain? Funny. Yeah, we can go back and look at Tesla. So let's see. Looking at Roku here. Nice weekly squeeze. I do like that. So you have an overhead price target at 123 and then 130 on this weekly squeeze. And let's look at the daily chart. So again, you have a nice price target at 123 and then 130. It just doesn't have a great entry right here. But I mean, I think overall the chart looks really good. Nice long-term trend. You have a 195-minute squeeze. I feel like you could at least trade it up into 120. So I do like that. Let's look at Tesla. ASML, please. Allison got free Palantir shares long ago for using Moomoo. Interesting. So, I mean, as far as Tesla is concerned, it just has a lot of resistance at that $500 strike price. So, we had this huge move. We had this squeeze right here. that was a slingshot move. It finally broke out up above that 466 price point, and we had a lot of momentum. It traded right up into that $500 strike price, literally, like, the day after. So I had a $500 butterfly on that was expiring on the 19th, and I took off half of it for well, 2/3 of it, I think I took off on the 18th, and I made, like, 40%, because it wasn't quite at the $500 strike price. Then the next day, um, the ticker kinda got hammered, and I took a loss on the other 1/3. So that was kind of a bummer, especially because then the very next day after that, it traded up into 498, but it was on a Monday, and I was, trading this for, options expiration Friday. So I didn't quite get my perfect $500 price point on Tesla, but I mean, effectively that high right there, that was basically the move into 500. So once it hit that zone, it hit that area of resistance, and it just kinda ran out of momentum because this was the big momentum move in Tesla. That break out above the 465 price point, I mean, that was where it was at, right? So, at this point, I mean, I don't really see anything else. We have a setup on the 15-minute chart, but at this point, it's kinda pulling back. So, um, on the 30-minute chart, we have a situation where this 30-minute squeeze has fired to the downside, so, that's a pullback squeeze. Um, if you look at this 1-hour chart, this chart time frame also has a squeeze, but with that 15-minute squeeze going to the downside and then also the 30-minute squeeze going to the downside, that one very well could also fire to the downside. If we look at the earnings report that's coming up, that's gonna be the next big catalyst here. I also think that, the SpaceX IPO next year should also be a good catalyst just for Elon in general, and technology and everything else because he's working on those data centers in space. I, um, I live in Washington State, and it's been extremely windy for the last, I'd say, 2 weeks, and I have both cable internet and then also I have Starlink as a backup because, I do a lot of live streaming and whatnot, so I can't really have the internet going out directly in the middle of what I'm doing. But, this week when I was doing CNBC, of course, right in the exact moment I was about to go on, the cable internet went out and it switched over to the Starlink. Um, so ever since then, the cable internet has been just going out, going out, going out nonstop all week. And everybody near me has been asking about Starlink and on Facebook and all that kind of stuff. And I don't know. I feel like the Starlink IPO is going to be huge. People were commenting on Facebook near me that they have like this massive surcharge just to even get Starlink because they need to add more satellites to make it, high speed for everyone. So I don't know. I just feel like I'm probably a little biased just because, like I said, there's been windstorms here recently. And so there's been a lot of talk and demand for Starlink. But I just feel like for Tesla going into next year, um, you know, even though obviously Starlink is different than Tesla, I still feel like it can be the year of Elon. Um, you've got the robo taxis, you have the robots, you have the AI data centers in space. I mean, there's just a lot of different things that I think could go well for Tesla. Um, and so when you're looking at Tesla and saying, okay, well, when's it going to stop yanking my chain? When's it gonna start trading higher? I would say as of right now, it should probably just pull back a little bit. Generally, I like to look for bullish moves going into earnings on stocks that I like. The issue with Tesla itself has just been that it's been difficult for this stock over the course of the past couple of years, really, with inflation, cost of everything so high, Elon being so political. Like, there's been a lot of problems with this stock. But it's still one of my top holdings in my long-term stock accounts, which has been massive for me over the course of the last couple months. So that's great. But from a trading perspective, it's been difficult to trade because it's just been so news driven. And at this point, the next news related event is this earnings report. And you can see that the last 2 quarters after earnings, it has fallen. Um, so when you're looking at this, it's kind of like, well, could I trade Tesla higher going into earnings? It's like, well, why would you want to when you can see it fell 4% last quarter and 6% the quarter before that? There really wasn't a rally going into earnings. Um, Tesla is just a momentum stock. So whenever the momentum comes back, and for whatever reason, it needs to be some sort of news related event. Um, that can drive it higher. And then if and when it breaks through $500, that is going to be the spot where we can say, okay, let's trade it to 520, let's trade it to 550, and like let's just keep riding this thing. But right now, I just feel like the momentum has kind of died at that $500 strike price. I take data centers in space with a grain of salt because we can't even maintain a space station up there. Well, yeah, but the space station is not being ran by Elon Musk. So this is like a privatized venture. So I don't know. I mean, I think it's cool. I like the idea. There are huge windstorms in Colorado as well. Yeah, I mean, my husband tracks all of that stuff and he showed me exactly how many times the internet has gone out and it's like just over and over and over again. Um, is Starlink good enough for trading and good enough for streaming? I mean, I have used it to stream. It's not We have it set as our backup because, my husband wasn't really fully sure if it was gonna be good enough to do CNBC and Fox and all that stuff and streaming the trading room. Um, but I mean, it has worked for it when we've needed it to work. Your SPX 6930 closed at $1.50 debit. Nice. Yeah, I'm just screwed up. I screwed that up, so I could have just gotten right back in it. Set up 2 computers and run both. Yeah, I mean, it's also too the internet load itself, So if my son is home and he's, right next to me streaming, and then my husband also works from home, is doing something in his office, it's like the overall load. So, it looks like the, 6930 worked out really well if you got into it and didn't mess yours up. Yes, I did. Waiting for the cash settle. Nice. Let's go to the options chain and check it out. Ding, ding, ding. All right. So, are you serious? 693000. All right. Well, now I have 692995. Yeah, nice pin on the 30s. Well, maybe on Monday I'll be more on top of it, guys, but hopefully some of you guys were able to make money on it. The only person you didn't answer, did I miss your question? How about the sure to be negative Tesla vehicle delivery numbers for 2025? Uh, I mean, I'll look more into that before I give you a better response. I just feel like overall Tesla has been doing well, especially in other areas in spite of struggles like that. ASML is interesting. I was doing hours and hours and hours of research for my like end of year predictions. So I see a question from you. Are you making end of year predictions? Are you making end of year goals? Yeah, I definitely do the end of year predictions and end of year goals. I was working on that this morning. Um, I have a big list of different stocks. So I was working on that this morning. I'm supposed to do Charles Payne on Monday, and that's going to kind of go hand in hand with my 2026 predictions. So I'll see if I can write something up for you guys for that. Um, ASML is interesting because I was using AI to do a lot of my research this year because it's just so much faster, and once I find some picks, I'm like, "Hey, find me some other ones that fit the same criteria," and it just generates ideas that then I can go through and I can narrow them down. So I was using that, and ASML was one that just kept coming up. So for whatever reason, Grok really likes this one. It looks like it does fit my criteria because of the pretty consistent EPS estimates, the space that it's in. Um, the one thing that it doesn't do for me is it's not in a great pullback. So some of the other ones that I picked, like ALAB, this is the exact kind of thing that you want for a long-term stock pick. I mean, you want a really nice pullback to buy on the dip for a potential move higher next year. ASML is just already at the highs. So for ALAB, I mean, this one looks significantly better for entry because it has a pullback buy into the 34 EMA. It also has a squeeze right here, and then it has the $300 price target. So, um, I like the stock that you picked. It's just it doesn't have a great entry right here. Apple. So again, great move on Apple. It just doesn't have a great weekly entry. But as far as the daily chart is concerned, I think the daily squeeze looks great. Daily chart with an earnings report coming up on the 29th. Really nice hold of the 50 simple. I'm actually really glad that you brought this one up because it looks really good for a short term trade going into this earnings report. Doesn't have a consistent run into earnings, but I would say it's worth a shot for a long going into January. Most of the Mag 7s look really good right now. Nice call, Danielle. Closed it at 25%, 25-cent debit. Nice. Nice, nice, nice. ASML, AMAT make all the chip fab equipment. So the other reason why I don't really trade ASML is just because the volume is not very good on it. It's a really high price name now. So it doesn't mean it's not a good, company long term or anything. It's just really try to trade tickers that have good volume in the options market and, easier to deal with strikes, all that kind of thing. But I'm telling you, I was doing research and like Grok just kept bringing up ASML, ASML, ASML. It's like interesting. I told it was like I want something that's not at the high. Come on. All right. Well, I think that I answered all the questions. So let's all have a great weekend and I'll see you guys on Monday. Thank you. If you're interested in joining the trading room, you can go ahead and click on the link. I'll post it in the chat below. But essentially, I'm in the trading room at least 3 times a week, and then I'm in there posting alerts, um, with the actual trades that I'm in. You can also just see me trade live like I was doing today. So, that means that there are trades that I'm going to get into. And then there are also trades that, I look at and I say, oh, I like this idea, but I'm not necessarily going to get into it myself. So, you can just follow along if you're interested in following along. It's just primarily because of the, however many trades that I have on. It just depends what I have going on. So sometimes, I look for ideas and then I don't trade them myself. Sometimes I do trade them myself. But if you want to come join us in the trading room, you can check out that link. Other than that, hope you have a great rest of your weekend